further ado, we call up our next speaker, Mr. Dennis Gartman. He is the publisher, editor of the Gartman Letter, a daily commentary on global capital markets distributed each business day. Let's welcome Mr. Dennis Gartman.
Is this Iowa? No, I thought it was heaven. I would have sworn it was Iowa. Thank you for allowing me to be here this morning. I think this is the third or fourth time that I've spoken for this group. Before I came, I talked to my lovely bride of 29 years and said, can you, in your wildest dreams, can you believe that they'd invite me back for 3 or 4 times? That earlier this week I was on television twice, that I got interviewed by the Wall Street Journal, and she said, hey, wait a minute, big guy. We've been married 29 years. It's been at least 30 since you've been in my wildest dreams. Sadly, that's probably closer to the truth than anybody wants to imagine. I told people last night at the dinner that I'm supposed to be a trained economist, but I've tried very hard in the last 40 years to overcome that fact. Everything they taught me in school has proven to be utterly, completely, and totally worthless. I wish I'd spent more time when I was in undergraduate school studying art history. I wish I'd spent more time studying philosophy. I wish I'd spent more time studying psychology, because as a trader, and I put my own money at risk every day. What I write about in my newsletter as I talk about what's happening around the world, I do in my own account, so I have my own money at risk. And if I could do anything more, I'd learn more about the fact that markets are the sum total of the wisdom and the stupidity of everybody involved in them. I'd like to go back and take a look at why did Hamlet, for example, what caused him to be so slow in making the decision that it was indeed his new father, his stepfather, who killed his father? Why did King Lear, what was he thinking when he split his kingdom into 3 parts? I'd like to spend more time talking about, thinking about, writing about, learning about the psychology of how markets function. And we learn that from literature, we learn that from psychology, we learn that from philosophy. I get up every morning at 1 a.m. Eastern time. Here last night I had to get up at midnight to put together 8 or 9 pages of what's going on around the world. And I tell everybody that my job is to be the liberal arts major of the capital markets. I can't tell somebody in the energy market more about energy than he or she knows. And if I can, he or she will not be trading energy very long. I can't tell somebody who trades grain more about the grain market than he or she knows. And if I can, he or she will not be trading grain for a very long period of time. I certainly cannot tell somebody trading in the debt market more about the debt market than he or she knows. And if I am, he or she will not be trading debt for very long. But what I can do is tell the energy trader what's happening over in the capital markets. I can tell the capital markets trader what's happening over in the grain market. I can tell the grain market trader what's happening over in energy, and how those all fit together, how they all impinge upon one another, how the political circumstances around the world are involved, and how they affect what we do each day as we try to discern where prices are moving. So I want to talk about several things this morning. The first thing I want to talk about is trade, and how we misunderstand the concept of trade, and how we totally misunderstand the concept of trade deficits and trade surpluses. I start by saying that I am somewhat to the right of Genghis Khan politically, and I am an absolute libertarian when it comes to free markets. And I also will state the fact that I voted for Mr. Trump in the last election, and I would have very grave difficulty in doing it again because he simply does not understand the concept of trade. Where I am severely worried about the fact that we worry in the United States about the fact that we run an imbalance of trade deficit. And all I've learned since I started in the capital markets in 1974 is that every single year, our trade deficit, with the exception of 1 or 2 years, almost every single year, our trade deficit has gotten larger and larger and larger and larger and larger and larger. And yet, where are we when we look at the economy of the United States? We are clearly in better condition now than we were in 1974. GDP has expanded by a multiple since 1974, and every single month we have a larger trade deficit. The only time in the last 25 or 30 years that we've actually seen a decline, and not to a trade surplus, but an actual decline in the size of the trade deficit from one month to the next was in 2007, 2008, and 2009, when we were in the depths of recession. If it takes economic weakness to give us a lesser trade deficit, I can give us a trade surplus very quickly by doing one thing. I, Dennis Gartman, can resolve our problem with the trade deficit and resolve our problem with the budget deficit, and we'll talk about that in just a few minutes, very simply, by driving the marginal tax bracket to 100%. If you drive the marginal tax bracket to 100%, you will have no money whatsoever to spend. We will import no goods. We will still export some goods, and we will run a trade surplus. Do we wish to see that happen? And my response would be, I hope not. We misunderstand that with an imbalance of trade deficit, we run that is absolutely concurrent with a capital surplus. We run trade deficits with the world. They run capital surpluses with us. Let's take trade numbers from the macro perspective to a micro perspective. I think it will make things a little easier to understand. I run an imbalance of trade deficit every month with my dentist. I run an imbalance of trade deficit every month with my doctor. I run an imbalance of trade deficit every month with my lawyer. I run an imbalance of trade deficit with my automobile mechanic. Every month I run trade deficits with all of those people. Should I try in some manner to run trade surpluses with them? No, because I run trade surpluses with my own clientele. I run trade deficits with the vast majority of the people I deal with, and a small majority of the people I deal with, I have trade surpluses. Let's think about California. California runs a trade deficit with Texas. Should California try to do something to run a trade surplus with Texas? I suspect not. I think it would be an illogical and ill-advised decision. We worry too much, too greatly, too grievously about the trade deficit the United States runs ostensibly with China. Now, I will understand. I will grant that the Chinese trade unfairly. I will grant that statement. For example, I sold my newsletter to several clientele in China. Chinese cheat. No question about that. They make grievous mistakes. I sold my newsletter to a couple clients in China, and what did they do? They began selling my newsletter to other people. They stole my newsletter. I stopped, therefore, trading with the Chinese. That was my decision. That was not government decision. That was my decision, and I made that on my own. I would object, however, if the United States government told me that I cannot trade with the Chinese. I would choose not to, but I would object if the government made that decision. I'm also fearful about the fact when I hear government officials say, I love free trade, but I wish to have fair trade. Every time through history, whenever you've heard the term, we would like to have fair trade, that is the precursor for trade tariffication. And trade tariffs, if I have one fear in the world today for a continuation of economic growth, it is the fear of rising tariffs that the United States is responsible for primarily at this point. I fear the increased tariffication of the United States economy. I fear the people in the Trump administration who think that running a trade surplus is by definition the great objective. They're wrong, it's ill-advised, it's bad economics, and it has to be stopped. We are believers here in the United States in free trade. We should be sponsoring free trade as aggressively as we possibly can. We should be selling more grain to the Chinese. We should be selling more stuff to the Chinese. Finally, let's think about the Chinese trade deficit or trade surplus, our trade deficit with China. Let's think about what's going on there. We buy stuff from China. We give them paper in return. We get stuff from China, and we give them debt securities that they buy in return. We buy stuff. We give them paper. To me, that seems like a pretty good trade. To me, that seems like something we should be continuing. To me, that does not seem like a problem, and I know that most of you have not looked at it from that perspective, but that's exactly what's going on here. We buy stuff, we give them paper. It's a pretty good deal. Let's talk about the budget surplus or the budget circumstances in the United States. When I first got into the business in the early 1970s, I was told that the United States is running a budget deficit and this cannot continue. I was told in 1977 that the United States is running a budget deficit and this cannot continue. I was told in 1982 the United States is running a budget deficit and this cannot continue. In 1987, I was told the United States is running a budget deficit. This cannot continue. In 1992, I was told the United States is running a budget deficit and this cannot continue. In 1997, I was told the United States is running a budget deficit and this cannot continue. In 2002, I was told the United States is running a budget deficit. This cannot continue. In 2007, I was told the United States is running a budget deficit. This cannot continue. In 2012, I was told the United States is running a budget deficit, and this cannot continue. In 2017, I was told that the United States is still running a budget deficit, and this cannot continue. Here we are in 2019. The United States is running a budget deficit, and I'm being told that this cannot continue. Sometime in the future, it cannot continue. Herb Stein had a great line, one of the great economists of all time, who said, "That which cannot continue won't." The important thing is to understand when the won't becomes when. I've been told for 50 years that the United States cannot run a budget deficit any longer, and it cannot continue. And here we are 50 years later, and we have a larger budget deficit now than we had then, every single year. I was also told in graduate school that if we run a budget deficit, it will drive interest rates higher. But what has happened since 1983? Interest rates have gone consistently, steadily, trending ever downward at the long end of the yield curve. In fact, the correlation is, as the budget deficit has gotten larger, interest rates have gotten lower. Everything they taught me in school has proven to be utterly and completely wrong. There shall be a time at some point in the future when the United States cannot continue to run a budget deficit. There will come some period of time when things will go awry, when the bond market will tumble, when things will go upside down, when dogs will lie with cats, when the Cleveland Browns will win a Super Bowl. There will come that time sometime, but it is not now. I am constantly amused at how people become so terribly disconcerted, so horribly dismayed, and become so vociferous in their argumentation that this cannot continue. Here we are 50 years later, and it still continues. I also tell people, I don't get that terribly upset about the fact that the United States runs a budget deficit, because we look at the budget deficit and we look at the balance sheet of the United States in a very peculiar manner. We're the only country in the world, you've heard me say this before, I've said it for 15 years, I'll say it today, and I'll say it 15 years into the future. We're the only country that looks at our aircraft carriers, that looks at our streets, that looks at our federal hospitals, that looks at our Army, that looks at our tanks, that looks at Yellowstone National Park as having no value on the balance sheet of the United States. We carry Yellowstone National Park on the balance sheet of the United States at zero. I'll pay $5 for it right now. I would help the asset base of the United States dramatically if we were to do that. The point being, we don't look at the balance sheet of the United States in the same manner that businesses look at their own balance sheets. And for that reason, I actually don't lie awake at night and awaken at night worried about the fact that the budget deficit is growing as egregiously as it has. If I leave you with anything here today, I wish you to be less concerned. Don't be as worried about the fact that the United States is running an imbalance, a trade deficit, and a budget deficit. We could resolve that very quickly, as I said, by raising the marginal tax bracket to 100%. We could resolve both of those things in an instant. We'd run ourselves into a depression, but we could resolve those problems. On the other hand, I think we're doing fine. Let's talk about the dollar. As long as the United States remains the reserve currency of the world, and there's no reason to believe that we will not continue to be the reserve currency of the world, as long as we remain the reserve currency of the world, on balance, the dollar will continue to get stronger. It has to. Who is the reserve currency nation in the world? And historically, going through past history, reserve currency nation and being the reserve currency allows you to sell debt to the rest of the world predicated in your own currency, which is a wonderful thing to be able to do. If you're Indonesia, almost certainly you have to, if you're going to have a new debt instrument, you have to predicate that in US dollars. If you're Japan, you can do it in yen, but predominantly you'll tend to do it in US dollars. If you're Zimbabwe, if you can ever go to the debt market again, you have to do it in US dollars. We are the only country in the world that really can readily, easily, and constantly sell its own debt in its own currency, which is a wonderful benefit to us. Reserve currency status inures to the country with the strongest military power. Has been through history. Go back to the 14th century, Portugal, the strongest military, the strongest navy, was the reserve currency at the time. It was usurped by Spain, its next-door neighbor, when Spain's navy became, and when Spain's army became the dominant power in the world. It was usurped by the British after the Spanish Armada, when England became the world's most powerful dominant navy, the most powerful dominant military organization in the world. And it stayed that way until 1956, when after World War II, when clearly it was us that won the war, when England was becoming a lesser nation, and finally when England and France had lost a war with Egypt over the Suez Canal, we became the world's reserve currency. We have been, shall continue to be, and into the future will always, as far as I can see going forward, remain the world's dominant military power. How do I know this? We have 11 aircraft carriers. We'll soon have 12. Who has the most aircraft carriers after us? England will soon have 2. Italy already has 2. Somehow I don't worry about the Italian aircraft carriers. China has 1, going to have 2. Russia has 1, going to have 2. We have 11, soon to have 12. If you've never seen an aircraft carrier, and if you live here in Iowa, I remember when my daughter went to graduate school in Kansas, she said, "Dad, there are people in Kansas who have never seen an ocean." I suspect there are people in Iowa who have never seen an ocean, but if you've never seen an ocean, you've never seen an aircraft carrier. You need to see an aircraft carrier up close. I live in Suffolk, Virginia, on the coast of the terminus of the Chesapeake Bay. And from my house, from my office, it's 17 miles over to Norfolk Naval Station. 17 miles. The horizon at sea level is 7 miles away, so this is 2.5 sea level miles away. I can see the tops of the aircraft carriers that are stationed at Norfolk Naval Base 2.5 sea levels away. It's amazing to see one. 85 aircraft on board, 5,000 people on board. It's said that the American president wakes up every morning and asks, "Where are my aircraft carriers?" I maintain that the Russian president wakes up every morning, the Chinese president wakes up morning, the South African president wakes up morning, the Iraqi president wakes up every morning and asks instead, "Where are America's aircraft carriers?" As long as we remain the dominant military power in the world, we shall remain the strongest reserve currency and have reserve currency status. Which brings us to what's going on now in England, what's going on now in Europe with Brexit. I don't understand Brexit. I don't understand the problems incumbent in it. All I understand is this. If I were a Brit, I would have voted to leave. Because I would be terribly dismayed at having Brussels tell me how I can grow Brussels sprouts, telling me how much acreage I can grow to wheat, telling me what sort of mileage my automobile can have, telling me how education should be purveyed. I would grow terribly dismayed at having somebody outside my country telling me what I can or what I cannot do. So I was somewhat happy when the Brexit vote occurred 2 years ago, even though it was only a 52 to 48 vote for the Brits to leave. They finally have said to continental Europe, "We've had enough. We don't like your leftist socialist ways, and we prefer to leave." March 29th is the day that England has to, I shouldn't say has to. They'll probably kick the can down the road and allow some sort of extension. But March 29th is the day that Brexit is supposed to occur. I hate the term Brexit. When England is supposed to leave, when the United Kingdom is supposed to leave, the European economic, for lack of a better term, the European economic community. Remember, England never joined the monetary authority. England only joined the political authority. England never gave up the British pound sterling. Probably a very good decision. The sticking point right now going on is how do you take care of the circumstance on Ireland or on the island of Ireland? And we forget here in the United States that Ireland has the Republic of Ireland and it has Northern Ireland. Northern Ireland being part of the United Kingdom. For the past 10 years, since the inception of the European, 20 years since the inception of the European community, there has been the ability to move across the Irish borders without having to stop, because it was all part of the European unification process. According to Brexit, and the fear is they will put up terminus, they will put up a border, they will put up the ability to stop people from transferring from the Republic to Northern Ireland, from Northern Ireland over into the Republic. And it returns us to for those of us who are old enough to remember when there were the Troubles, when the Irish Republican Army tried to unify the Irish island into one unified whole. And remember last week we actually had a return from a provisional wing of the Irish Republican Army taking part in a terrorist attack. So things are becoming a little edgy. Things are becoming a little disturbing. Things are becoming terribly confusing. And I feel bad for Mrs. May, who I think is who's been put into the most uncomfortable, most disturbing, most disagreeable positions I can imagine. I think she's done actually an admirable job, because she was not in favor of Brexit to begin with, but the job of Prime Minister was thrust upon her. As she said, the people of England have voted to leave. She's going to try to do the best that she can. Let's talk about stock prices here in the United States. Let's talk about the economy here in the United States. The biggest problem that I see, other than tariffs, is the Federal Reserve Bank. And not that the Fed has raised rates, not that the Fed has tightened monetary policy in the public manner that we are all involved in, that we see on the news all the time. Will the Fed raise the overnight Fed funds rate, or will they not? What you need to watch more than anything, every Thursday afternoon, the Federal Reserve Bank of St. Louis announces what is known as its adjusted monetary base. The adjusted monetary base is the stuff from which all other monetary aggregates are effectively derived. And without getting too terribly esoteric, the adjusted monetary base is primarily the Fed's holdings of Treasury securities. Now, the nice thing about being a central bank is you get to create money out of the thinnest of possible air, which to some people sounds like and can be, in fact, discouraging, can be, in fact, confusing, can be, in fact, inflationary. But let's be honest, if you wish to see the economy of your country move up by 2 or 3%, and to have the population each year grow by 2 or 3%, you need to have 4 to 6% more money in circulation than you had the year before in order not to have even inflation. You have to create more reserves every year to accommodate population growth and the hoped-for growth in the economy. In 2007, 2008, and 2009, the most serious recession we've gone through since 1974, and many would say even since the Depression, the Fed took it upon itself, and I think the Fed should still be applauded for saying, we are the adult in the room, and we see that the situation here is becoming so compacted, so protracted, so serious. Although we are going to be attacked for doing so, we're going to expand monetary aggregates as aggressively as we can. We're simply going to throw money at the wall to make certain that this thing does not implode in and upon itself. Mr. Bernanke was attacked for having done so. I applauded him for having done so, because that was the first time in my life, in my career and being in the capital markets, that I was actually fearful. For several months in 2007, 2008, and 2009, I became scared that the whole thing was truly going to come apart at the seams. And the central bank acted like the adult in the room and said, we're going to do what we can to stop it and inject reserves into the system as aggressively as we might, taking the adjusted monetary base from what at the time seemed large at $800 billion in 2008 to $4.3 trillion, from $800 billion to $4.3 trillion by April of 2015. As that money went into the system, two things had to happen. The economy had to turn around and get better, which it did. And more importantly, until the economy turned around and got better, until the demand for plant and equipment and production grew, which eventually it shall, and in which eventually it did, money went into the stock market, and eventually it made its way into the economy for plant, equipment, and labor. The Fed stopped increasing the adjusted monetary base in April of 2015. And quietly, slowly, it has allowed the adjusted monetary base to decline. It's like taking your foot off the accelerator of your automobile. It doesn't come to a grinding halt, but certainly the progression, certainly the progressive movement, certainly the enthusiasm with which your car moves forward when you're pressing down on the gas pedal, when you leave up on it, the car suddenly slows down. And the economy has begun to slow down, but more importantly, the capital market, more importantly, the stock market, has begun to show signs of weakness. If the Fed continues to allow the adjusted monetary base, and again, you can get this data on Thursday afternoon from the Federal Reserve Bank of St. Louis, if the Fed were to continue to allow that adjusted monetary base to continue to decline, and it's not selling Treasury securities, it is simply allowing old Treasury securities to roll off, to mature. If the Fed were to continue to do that, if the fuel to sponsor both economic growth and a strong stock market are taken away, one of the two has to happen, or two of the two have to happen. Either stock prices have to fall, or economic activity has to weaken, or stock prices have to fall and economic activity has to weaken. I think that the economy is strong enough to continue even as the Federal Reserve Bank allows the adjusted monetary base to quietly, slowly, laboriously move lower. And that is the real tightening that is taking place. It's not the raising of the overnight Fed fund rate that is having an effect. It's the fact that the Fed is allowing its adjusted monetary base to roll off, the fact that the Fed is allowing its Treasury securities to mature and cease to exist, that causes me some concern about stock prices. So I don't stand in front of you today as being overtly bullish. In fact, I'm tendentiously, kind of, sort of, a little bit, tenuously, modestly, sort of, I hope I'm clear, bearish of stocks. I think we've had a 9-year bull market. It's been a lovely thing. Everybody has gotten wealthier as the stock market has gone up. The beautiful thing about the stock market is it's not a sum-zero game. As stocks go up, everybody gets healthier. Everybody gets wealthier. The economy feels better. The psychology changes. It's a beautiful thing. It's not like the commodity market. It's not like the futures market where one team wins and one team loses. In stocks, as they go up, there's very few people who are short, and the vast, vast, vast majority are long, and the net worth of the country moves higher. I'm a little concerned about stock prices. I am less concerned about the economy. Since we turned higher in March of 2009, we have been on a consistent movement from the lower left to the upper right as far as the economy is concerned. And until we do something truly stupid, and never underestimate the ability of Congress to do something truly stupid, and more importantly, never underestimate the ability of our president to do something truly stupid, and never truly underestimate the ability of both teams to do something truly stupid, unless they do something truly stupid, and stupid would be raise taxes, stupid would be raise tariffs, stupid would be to continue to argue for fair trade, wisdom would be cut taxes, wisdom would be slow spending, wisdom would be continue to be expansive in your support of free trade. Until we do something truly stupid, the economy is likely to continue to move from the lower left to the upper right. But instead of moving nicely at 3 and 3.5% as we had been, maybe it slows to 1.5 or 2%. Maybe that's what happens. Let us hope that that's what occurs. Let's talk about commodity prices for just a few moments. Again, I put my own money at risk every day. So what I tell you today is what I'm doing in my own account. And commodity prices appear to me, and I'm also the chairman of the University of Akron's endowment committee, and I'm putting their money at risk in the same instance. Commodities are bloody cheap, unbelievably cheap, historically cheap, demonstrably cheap, uncommonly cheap, stupidly cheap, historically cheap. I hope I'm clear. I have made my own bets. I think that $9 soybeans are unbelievably low. I think that $3 corn is unbelievably low. I think that $5 wheat is unbelievably low. And I'm long. I left an order today with the young man who trades for my account back in my office. I'm buying soybeans today. And I use the ETF market, even though I grew up as a futures trader and had my own seat on the Chicago Board of Trade for a number of years. And I tell people down on the floor of the board, I was there for 8 years. I got rich 3 times, broke 2.5 times, and loved it in both directions. There was no more fun than I ever had in my whole life than being on the floor of the Board of Trade. Coming home and telling what was now my ex-wife that we'd lost the house is a little disconcerting, but those things sort of happen. Okay? I always used to say I lost my first wife to a margin call. It wasn't quite that severe, but it was close to that. I'm putting my money where my mouth is, and I want to be a buyer of the grain markets. And it's not that I'm just here talking to Iowans and Central and Middle Americans who are where we grow our great grain crops. It's not that I'm touting this in front of you. It's actually I have my own money at risk, and I have the university's money at risk. I think historically, stocks are expensive, commodities are unbelievably cheap, and the spread between the two is likely over the course of the next 2 years, 3 years, 4 years, however long it takes, to narrow. I will tell you this. One of the few things I learned, and if you learn nothing else from me, learn this today. The secret to life, the secret to trading, the secret to investment, the secret to life generally is this. Do more of the things that are working. Do less of the things that are not. Guys, if taking flowers to your girlfriend or your wife gets you lucky more often, take her flowers on a more consistent basis. Do more of the things that are working. do less of the things that are not. I bought grains, I bought commodities, I sold stocks. It has not worked in my favor yet. It's against me by about 0.5% over the course of the last year. 0.5%. Relatively modest movement against me. I won't do any more because the market has told me I'm not right yet. I haven't done the right thing yet. And how do you know you're right? You're right when you're profitable. It's that simple. It's the beauty of the capital markets. It's the beauty of what goes on in the futures exchanges. It's the beauty of what goes on in the stock market. You're right when you're profitable. And until you're profitable, don't do more. Whatever you do, don't average down. If you bought something at 15 and it goes to 7, don't buy more. If you bought something at 15 and it goes to 20, buy more. Why? Because the market has told you that you're right. So I'm positioning myself. I'm long commodities. I'm tenuously short of stocks against them. I'm sort of bullish of stocks generally for the long run, but I'm really bullish of the commodity market. And now I want to leave you with one sense of optimism. I was lucky enough to grow up in Akron, Ohio. Akron, Ohio was the rubber capital of the world. Every tire on every car that you ever bought in the 1930s, 40s, 50s, 60s, and into the 1970s, every tire that you ever owned was manufactured in Akron, Ohio. Since 1974, there have been no tires manufactured in Akron, Ohio. Goodyear's gone, Goodrich is gone, Uniroyal's gone, U.S. Rubber is gone, Cyberling Rubber no longer exists. All of those companies that as a kid growing up in northeastern Ohio, that if you went to college, you went to work in the rubber companies in administration, and if you went to high school, you went to work in the rubber companies on the line, are gone. The whole industry has disappeared. And yet you go to the to northeastern Ohio, and the unemployment rate's about 3.5%, almost exactly what it is in the rest of the country. Except the entire industry that made that area strong is gone. Steel over in Youngstown is gone. Refining industry in Canada, in Cleveland, Ohio, which is where the refining industry began, is gone. If you ask the people of Akron, Ohio, would they like to have the rubber companies return, you'll get a quizzical look at you, and they'll say, of course not. And if you ask them what has replaced them, you will also get a quizzical look. They'll tell you, we don't know. And I will tell you that instead of having 15 companies that had 20,000 people working for them, there are 1,500 companies having 200 people working for them in high tech and in various different industries. That is the essence of what makes America, America. We have the ability to change. We have the ability to take what nobody understood and what nobody could foresee and change things for the better. Which brings me to my final comment today, and it's about energy. They told me for all my life, back in the 60s, back in the 70s, in the 80s, in the 90s, in the teens, and until last year, that we were going to run out of crude oil in the United States and certainly in the world. And the only thing I can tell you that I can guarantee you, and my wife says don't guarantee people this, I can guarantee you this, that 15 years from now we will have 4 times more proven reserves of crude oil in the ground than we have right now. If there's been one demonstrative, unbelievable change in the United States, it's the fact that we are now on a daily basis, it depends on which day you look at the numbers, it's either us, the Saudis, or the Russians, who are the largest producers of crude oil. We have gone from producing 4.5 million barrels of crude oil a day a mere 10 years ago to approaching 12 million barrels of crude oil a day every single day. And our trend is this way, from the lower left to the upper right. The Saudis is tending to be this way, and the Russians tend to be sideways also. And in another 5 years, we're probably going to be producing 15, maybe 17 million barrels of crude oil a day. And we owe this to 2 things. We owe this to better seismic, actually I should say 3 things. We owe this to better seismic technologies so that when we look into the ground, we used to think that crude oil deposits, that natural gas deposits were rather finite and well-defined, almost like your fist. And if you got lucky enough to hit the top of that, you got a gusher. And now we know through seismic technology that instead those reserves in the ground look like your hand with fingers that extend out for miles and in various directions. And now we drill down with a soda straw. Our hit rates, instead of being 50%, are 95%. And now, with horizontal drilling, We are able to go out into the fingertips, and we're sucking crude oil and natural gas from places that a mere 2 and 3 years ago were economically impossible to go and gather from. We frack. And I know that in many instances fracking has a bad name, but fracking has changed the world with the ability to find more and ever more crude and natural gas. It's astonishing what we have done here in the United States by taking fracking, horizontal drilling, and seismic technologies to make us, on any given day, the #1 producer of energy in the world, and not anybody would have told you that a mere 5 years ago. If you want to do something funny, if you want to use the internet to get a good giggle, the government in New York State has forbidden anybody to drill, even though the Marcellus Shale, a huge oil and natural gas formation that extends basically from West Virginia, northeast, all the way up to the St. Lawrence Seaway. The state legislature in New York has forbidden anybody to drill for natural gas or crude oil in New York. Take a look at a map of the number of drilling rigs that are on the Pennsylvania-New York state line border. And everyone who's drilled, and there are a huge number of drilling rigs stationed on the Pennsylvania-New York border. And you ask any one of the people who are drilling, are you actually horizontally drilling into New York? And they will tell you, oh, of course not. And of course they are. New York is stupid. Never underestimate the ability of governments to do truly stupid things. So I look at the world and say, you know what? I have some fears. I fear tariffs. I fear rising taxes. I fear trade circumstances. I fear the attempt on the part of the United States government to tell you people that we have a problem with a budget deficit and a problem with the trade deficit that they've told you for 50 years would be a problem, and which thus far has proven not to be. I fear that we will try to do something truly stupid to raise taxes and raise tariffs to try to combat two things that for the past 50 years have proven not to be a problem at all. I fear that we will that we will do something to stop the inflow of capital to the best place that capital can go to, the United States, and that we will do something to stem that tide. Remember, we buy stuff from China, we give them paper. As my old friend Paul Tudor Jones said, trading is like falling in love. You put your arms around that idea, you hold it tight. But when she shows you the first sign of disrespect, you throw her overboard and disavow any association whatsoever. So that's my story. I'm sticking with it. Market has proven me to be wrong many times in the past. It will prove me to be wrong many times in the future. And I'm quick to admit my mistakes. Thank you for listening. Thank you for your time. Thank you for inviting me back for the third or fourth time. And I think I have enough time to have a few questions, if that's possible.
So you talked about Brexit and NATO.
Yeah.
NATO was formed in the days after World War II. The world was a different place. We had the Soviet Union to contend with. We don't have that today. Is NATO antiquated and past its prime and past its usefulness?
No, if you ask a Lithuanian, if you ask an Estonian, if you ask a Latvian if NATO is antiquated, he will look at you and laugh and say, of course it is not, because they fear Russia on their eastern border as much as they've ever feared them, and would like to make certain that the United States stands by its treaties, stands up and says to Russia, we're going to be here no matter what. If you ask a Lithuanian, an Estonian, and a Latvian if NATO is antiquated, he would scoff at you. Of course it is not antiquated. If there is a problem in the world, if there is a country that is creating mischief other than Iran, it is clearly the Russians, and we need to understand that fact. And too many people don't understand that fact. So no, NATO is not antiquated. Can NATO be modernized? Yes. Should other people be involved in it? Yes. But again, ask an Estonian if he thinks NATO is antiquated. He will first laugh, and then he will cry.
Let me ask you one more question then, since there's no other takers. Vladimir Putin, is he another Joseph Stalin, or is he a George Washington? How would you characterize him?
Oh, he's clearly, he's not George Washington by any stretch of the imagination. He's clearly far more Stalinist than he is anything else. If I can only separate them between George Washington and Stalin, he's far more Stalinist than he would ever be. He's clearly not a Democrat. He's clearly an authoritarian, and I think he's clearly a dangerous person. The person that you have to be aware of that nobody pays much attention to, and the next speaker, you're going to hear one of the smartest people I've ever come across in my life. The next speaker, Peter, is just brilliant. Peter brought this gentleman to my attention 10 years ago, Igor Sechin, who is the chairman of Rosneft, which is Russia's largest energy company. Pay attention to what Igor Sechin does. I think he's as powerful as Mr. Putin is. Putin is not our friend. Putin is clearly our enemy, and we need to be aware of that fact. Thank you for your time. Good luck, good trading. Buy that which is going up. Do more of that which is working and less of that which is not. Your life will be better for it. Thank you for having me back.